emerging markets are facing some huge challenges right now. Quick primer on three types of markets: developed, emerging, and the frontier market. If you don't know, developed markets are considered US, Japan, Europe. Their GDP growth is lower, single digits typically. In the emerging market, it's roughly defined as developing but not fully developed. That includes countries like the BRICS, which is Brazil, Russia, India, China, and recently added South Africa. Many other markets are included in that. They were previously called the third world in the 80s. People didn't like that term. Investors will bet on them having higher GDP growth, typically 2 times or 3 times what the developed world has. China, for example, 2019, 6% growth. US in 2019, 2.1% growth. And of course, there's frontier markets. These are viewed as small, unstable, illiquid, generally risky. If you look at something like Kenya, Vietnam, those would fall into that category. Vietnam, 7% GDP growth in 2019 to the US is 2%. Sometimes people like to make bets on them. Here's a nice little chart for y'all to look at, and you can just see China versus Vietnam in the United States since the 80s. And so why is this all important? Well, the Wall Street Journal reported last week that EMs, the emerging markets, have been feeling massive pressure. We'll get to Sri Lanka in a moment. That's a frontier market, to be clear. But 3 things, well, we've got probably a half dozen things going on. Let me just highlight maybe the top 5, and then I'll hand it off to the besties. You have high bond and loan yields. The debt rates are increasing in the emerging markets and frontier markets. Think what happens when you got a variable mortgage or you try to get a new mortgage. In the developing markets, the developing market investors have stopped investing in emerging markets and frontier markets, as you might suspect, during a downturn, and they're even pulling money out. Then you have surging inflation. We all know about that, and we're going to talk about inflation here in the US because we got the print this morning. And slowing growth. We've also talked about this for the last 6 months on the program. All these problems get exacerbated when economic growth slows, and it's slowing globally. And then finally, we have the potential issue of contagion. We don't know exactly what's going to happen when various countries are facing these challenges, although we did tell you here what would happen with the Ukraine. Shout out to and Friedberg, fertilizer, wheat, oil, all that good stuff. And it's becoming very acute. Perhaps the canary in the coal mine is Sri Lanka. Breaking news, President Rajapaksa fled for the Maldives, and it's a state of emergency. Curfews were declared. I think that's been canceled as of the taping of this. We can get into the state of Sri Lanka. Your thoughts, Friedberg? I know you've been chomping at the bit to discuss this.
Yeah, that was a good long intro. I think, the high level for me, if you look kind of at debt markets around the world, there's about $300 trillion of global debt. And I put this chart in the chat here, Nick, you can put it on the video. And about 100 trillion of that debt globally is in emerging markets. And so these countries generally have, much more kind of variable GDP growth, as well as challenges ultimately with their currencies. Most of this debt recently, and this has been a trend for a number of years lately, has been issued in their local currency rather than in US dollars. And so as the currency devalues, it becomes more challenging for an investor to make a return if they're investing from a US dollar denominated base or some other dollar denominated base. So look, the emerging markets are heavily saddled. I mean, some of these countries have over 300% or 250% debt to GDP. And what's really gone on recently is that many of them, as net importers of energy and food, are going to struggle to make the stuff they need to make at home or to feed their people at home because of the rising inflation that's been happening around the world from the producers of those goods and services, of those goods. And so to import those goods is more expensive. That makes it more challenging for people to be able to afford food, to be able to afford energy. This is part of what we're seeing happening in Sri Lanka. What's compounding this is we have rising inflation in the US. So as we've been talking about a lot, the Fed's been raising interest rates here in the US, which means that you can now buy treasuries that yield 3%. If you're an investor around the world, where else are you going to put your money except US treasuries in a market like this? You want to buy 3% yield in US dollars versus, getting 10% yield in, some currency denominated account, some currency denominated bond in a country you don't really know well or trust as much as the United States. And so as a result, a lot of dollars are moving out of emerging market debt into US debt, and the price of that debt has collapsed. And so we've seen in the last couple of months a decline of emerging market debt of about 20%. This makes it harder for those countries to issue new debt to fund things, and it's creating this really challenging spiral that may ultimately lead to defaults. those defaults absolutely have a trickling effect. Because if one country starts to default and you're an investor in emerging market debt, you're going to say, hey, wait a second, this I just took a huge loss in this position. You're going to start to sell off other emerging market debt. And then it becomes harder for those countries to raise more debt and fund themselves, and it can cause a cataclysmic spiral. So, it's a really scary scenario we're wading into now. And I think we really hope that the US starts to taper interest rates and we find some stability in these markets over the next couple of months, because it's not just a food and energy crisis, it's also a humanitarian crisis, and ultimately could lead to a global financial crisis.
And in fact, the bond issuances.
It's highly complex, but it's something that folks are tracking very closely here.
What's happening also is the companies that were already at risk are going to start feeling this impact